afternoon. Welcome to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad, and my colleague Yatin, Mota. Looks like a tough start for October series, Yatin. Nifty and Sensex failed to hold the record highs and they ended in a negative territory as profit booking started to kick in the banking counters. But for the entire week, we saw good news. Both Sensex and Nifty have ended up with over 1% higher. And now with today's gains, Nifty and Sensex have ended with third straight week of gains. So Yatin, we started off well, given strength visible in both metal and banking counters. But towards the end, we saw a little bit of profit booking kick in. Bank Nifty also slipped over 1%.
Clearly, Lovisha, and if you look at the markets, consolidating at record levels, especially after a very strong expiry and a gap up today, probably kind of consolidation was expected. Yesterday, we saw some selling in mid caps that continued today as well. So the benchmark indices ended almost flat, 30-40 points down is a slight correction or probably a consolidation day. However, the mid caps continued to correct. In fact, if you look at the NSE 100 mid cap index, that was almost 0.2% lower. And if you look at the advance decline ratio, also was slightly lower than 1:1. So for every one advance, we had more than one declines coming in. But yes, sectorally specific moves in pharma seen today. Metals were strong. However, real estate and select media stocks had some profit taking, and both of these indices, which is the Nifty Realty and Media Index, were down over 1.5% or so.
That's right. But for the week, Nifty Metal, that was the top sectoral winner for the lead and the leader this week. Nifty Auto, Nifty Energy also saw over 4% gains this week. However, Bank Nifty, though it had hit new all-time highs in the initial sessions and yesterday as well, but it turned out to be the sole sectoral laggard this week. If you look at some of the top Nifty gainers, it was BPCL, Cipla and Pharma. So basically, pharma counters, they were doing quite well after UBS initiated a buy call on Pharma. However, on the other hand, Nifty 50 top laggards, they included Power Grid, Bharti Airtel, HDFC Bank, as well as ICICI Bank. MotoCorp is also one of the top Nifty 50 laggards after yesterday's, so extending 2 days of losses after UBS had initiated a sell rating and cited some concerns of market share erosion. But yes, broader markets, they turned out to be outliers in today's trading session. Mid-cap and small-cap indices, both of them snapped yesterday's downturn, and they again turned towards the green and they ended up with a mildly in green territory as well. So Yatin, what do you make of it for the mid-cap and small-cap, broader indices? Certain positivity we saw visible in those counters.
Yeah, the action continues to be very stock specific and in today's trading session, especially the sugar stocks were moving. In fact, Renuka Sugars gained 10%, Balrampur Chini 7% higher, and in general, sugar stocks were doing well. Obviously, this comes after the food minister's statement stating that the government might look at hiking ethanol as well as sugar prices or providing some minimum support price. So post that, I think both Balrampur and Renuka Sugar were in focus. Apart from that, Kalpataru Power, BPCL, SJVN kind of stocks moved in trade. All of these stocks were up nearly 6% in trade. On the flip side, in the real estate space, we had Lodha correcting 6%, Home First Finance down 7%, Ease My Trip, that stock continues to lag, was another 4% down in trade. However, if you look at stocks like Trend, BEL, which saw Nifty rebalancing, had the highest turnover on both NSE as well as BSE, with Trend volume stopping nearly 9,000 crores cumulatively on both NSE as well as BSE.
Okay, that's coming in for Trend as well. We'll be seeing certain the Nifty indices rebalancing effective onwards from Monday onwards. But what stood out to be the top performers were the Indian IT stocks. They gained a strong traction in today's trade. We saw the likes of HCL Tech, Persistent Systems and Coforge also hit about 52-week highs. Now, they built on to the gains after Accenture raised its revenue guidance to about 3 to 6% for 2025. Accenture also saw its net profits surge up to by 22% in the fourth quarter, while revenue was up by 5% in local currency terms. Now, let's understand what the brokerages are saying at this point of time. Nomura pointed out that the increased revenue guidance by the Accenture includes over 300 basis points inorganic contribution. Morgan Stanley, on the other hand, sees that this is a sign of relief for the IT sector, especially we have seen a sharp run-up in the past 3 months, but they also believe that they are just neutral to positive for the Indian IT sentiment. I think this comes on the back after, they are awaiting whether or not there would be a revival in the discretionary spends. So Yatin, do we expect that the good days are ahead for the IT stocks, or does it place no effect given that we have already seen such a sharp run-up already?
I think Accenture for the past 2 quarters has been volatile in terms of guiding investors. This time they have raised the guidance and the visibility. Probably the reason why Accenture shares ended higher. Today also we saw a gap up in Indian IT stocks, but that is probably fizzling out. Probably will wait for the results from TCS and Infosys, which probably come in the first second week of October. So premature to say whether or not we are out of the woods for IT. But TCS and Infosys, those results in the second week of October probably would get in more clarity on what's happening in the IT sector really on a global level.
Okay. Yatin, Jeffries also pointed out that, despite the Fed's outsized rate cut, the management commentary of HCL Tech, TCS, they all have not indicated a significant demand revival so far as of now. But yes, we will be watching out for Q2 results and see how India Inc.'s results pan out in the second quarter as well. But now moving on to the second stock in focus, we have Sun Pharma on the radar as well. It was one of the top Nifty gainers on the charts after UBS assigned a buy rating on the counter, and it has been seeing a potential of over 29%. So UBS expects Sun Pharma's patented molecules to double in revenue over the next 4 years. They also expect that the margins is expected to expand by 650 basis points. Now, this margin expansion is expected to lead to an overall earnings per share compounded annual growth rate of 19%. On the contrary, UBS has recommended a sell on Zydus Life Sciences, Dr. Reddy's, believing that the market has overestimated these firms' core profit margins. But on the charts, they have given good returns. Sun Pharma has also given good returns. It has risen about 20% so far this year. But Yatin, UBS buy is coming at a time when CDSCO has flagged an adulteration in its Pantoside tablets and Pulmocil injection as well. So it looks like the market at this point of time is concentrated on the better side of the news.
Absolutely, and Sun Pharma, being a pharma company, a lot of news comes in. But I think the kind of size and volumes Sun Pharma has in the drugs wherein there is some adulteration doesn't really impact the overall fundamental story or the earnings. But Lovisha, moving from Sun Pharma to SBI Cards, and Morgan Stanley has today come out with a report with an equal rating. Target is 745. In an environment when we have banks which are lagging, probably NBFC and credit card companies are catching up. In fact, if you look at the company's August spending data, it rose in terms of market share by nearly 18 basis points to 15.7%, which is a good thing. Given the fact that now most of these companies are facing the festive season. So ahead of the festive season, probably the credit card market share gain for SBI cards augurs well. However, if you look at the year-on-year basis, the market share is slightly lower. However, if you look at the impact of RBI notification on corporate credit card spending, as well as the falling spending, is something of concern, because RBI earlier had flagged off that the personal loan segment has seen some very high overheated lending coming in, especially from the NBFCs, which they want to really curb in. And probably from here on, it is important to watch as to how the credit card spend moves, especially in the festive season. And if that really picks up in terms of volumes and in terms of transactions, then credit card companies would have a good time. But as of now, if you look at the broker ratings, most of them have a hold rating on SBI cards, and the stock also has been range bound for a couple of months now.
Yes, absolutely. If we look at so far this year, it has only risen about just 2%, underperforming the benchmarks as well. So, yeah. Okay, so moving on to the next stock in focus, so we have NTPC. This was also one of the top Nifty gainer after its IPO bound arm, NTPC Green, entered into a joint venture agreement with the Mahatma Phule Renewable Energy and Infrastructure Technology. This comes as they undertake the development of 10 gigawatt of renewable energy parks. So earlier this month, we saw that NTPC Green Energy filed a DRHP with the SEBI also to launch its 10,000 crore rupees IPO. Now, the public issue, which is potentially could become the India's largest in 2024 as well, is expected to be an entirely fresh issue of equity shares. There's going to be no offer for sale for the promoter entities as well. On the charts, NTPC, it has been hitting successive record highs as well. Today also it hit a record high. So Yatin, on the valuations front, how does NTPC look like? Can we see like a further rising uptrend from here on?
So if you look at last 1 year for NTPC, Lovisha, the stock has returned more than 100%. And if I remember correctly, it's almost 110, 120% kind of return. In the anticipation that the renewable energy portion would see some monetization, and probably if you look at NTPC Green, I think this will be one of the mega IPOs that the markets will be looking out for, because in terms of growth, in terms of profitability, it is one of the fantastic business in the PSU space to get listed at attractive valuation. So I think a lot of things has already moved up for NTPC. Whether or not the momentum continues is difficult to say, because the last 12 months have been phenomenal from the returns of the investors' perspective.
Okay, phenomenal returns, that's true, but we will be watching out for NTPC Green Energy's IPO ahead as well. Okay, so alright, with this we have come to an end of this segment. On Monday we will be watching out for the SEBI's meeting, as they might roll out decisions on index derivatives. But until then, have a great weekend. Stay tuned to moneycontrol.com for all news, updates and market insights.